Welcome to this week's Cattle Call. I'm Susan Littlefield. We are broadcasting this time from Kansas City, Missouri, where the National Association of Farm Broadcasting's convention is underway. So if you hear a lot of chatter around me, I've got Clay Patton sitting to the right of me doing markets. I've got fellow farm broadcaster Michelle Rook to the left of me, also doing markets. It's a busy time in the media room, also a busy time for this cattle market. We're going to talk about last week was the highest we've seen in a year and a half when it comes to some of those negotiated cattle prices. Was the lead? Well, we're going to see some higher cash prices as we move forward. We know that Thanksgiving's next week. What is this all going to entail? Is there going to be a slowdown possibility going on? We're going to get all the details as you see. Joining me here on the screen is Brad Kooima. He's with Kooima and Varlick out of Sioux Center, Iowa. So let's start talking first off with this cattle market, highest in a year and a half. It's got to bode well as we move towards a holiday.
You bet. It's about time. I'm sure most of your listeners will say. And further your point here, not only did we get above 130, which basically has been about almost a 4-year high in the cash market, but we also had the highest number of negotiated trade volume in about a year and a half. Okay, so in other words, a big increase in the number of negotiated cash cattle traded. Now, anybody that knows me knows that I believe that those two are directly connected. If you increase the number of cash trade, I believe that it directly impacts that you get higher prices. I mean, it's a functional leverage, right? If the packer doesn't have to buy very many, why would the market be higher? So, you know, I don't think it's coincidental that cash was up $3 last week when we had heavy volume. There might be some that try to make you believe that. I would disagree strongly.
So we're going to see this momentum continue, though, with the cash. I mean, there's a lot of guys liking these numbers, selling,
which is a good thing. I think we're more current than we've been in a long time, in 2 years probably. And I'm a cattle feeder too, so I look at closeouts. And I had two this morning. One made a little bit, one still lost some money. But, those are probably cattle that were sold at 127 instead of 132, which, by the way, I passed today 132 here to two majors. So you can laugh at me next week when they go, wow, that dummy should have sold them. To your question of whether we're going to maintain this momentum, I think that there's the producer's highly incentivized to sell them because he's going to make a little money. That's positive. I think we're also we're quite current, more so than we've been for a long time. But to give you a little history lesson, typically the week before Thanksgiving, cash would be lower. Not always, but typically it would be. The old guys like me would say, well, Susan, we got a short for a long, which means we got a long for a short, rather. We got a long week, 5 days, and we got a short week to kill them next week, only 4. And so that typically would be a time where the packer, we're gonna eat a turkey for one meal a year, and that's always bearish, right? I'm trying to be sarcastic, but that's always in the market, right? Demand,
right?
But it doesn't feel like it. Like these 132 bids, those are fully steady, even a little higher than some of those guys were bidding last week already. And like we've talked before, we dare to pass, which is big. I think if cash isn't 1 to 2 higher this week, it will be next week. That's what I believe. And I think the market will continue to grind higher until shortly before the holidays. And then we'll see where we're at in terms of how soon this yearling crop comes in. I think the yearlings are going to come earlier this year because they got placed earlier this year because of the drought.
So are these supplies going to be manageable? You talk about these yearlings coming in maybe a little bit earlier than these plants are prepared for.
I think we're all right in terms of the ability to stay ahead of the supply. The packer has shown a pretty good ability the last 3 weeks, 4 weeks particularly, a big kill. I'm anxious to see that on that cattle on feed report this week too, whether or not that marketing figure might not be pretty good. 122 again, a couple of days this week already. So we're going to lose a little kill next week because of the holiday, but no, I think we can handle the available supply, and the packer's still making lots and lots of money. So he's incentivized to kill as ears back as fast as he can.
Do we expect any surprises in Friday's report?
Customers are asking me that too. Placements at 102. I know, the friends I talked to in the South would say probably we're all of that. Around here in the North, I kind of feel like we move cattle a little bit earlier than normal because of the drought conditions. I would have guessed around here we'd have been a little less than that. If there's a surprise to me, I'm hoping it comes on that marketing number. Maybe that'll be a little better than they expect, and that would help the front end of the market.
All right, we just need that turkey walking back and forth with a sign that says "Eat beef."
Yeah, you got that right. And I think most of us would prefer a prime rib, but we can put up with the 1 day a week, 1 day a year, I guess.
Sounds good, Brad. Thanks for joining us this week. And that has been this week's Cattle Call. Just a reminder, commodity futures and options do involve a substantial risk of loss, and they're not suitable for all investors. From Kansas City and the NAFB meeting, that's this week's Cattle Call. I'm Susan Littlefield.